Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. A down day across the commodities sector, and Matt really felt like a risk off here in those outside markets spilling over.
Yeah, just a little bit of everything moving against grains, for instance. I mean, the overnight markets, we had some excitement. The overnight markets were up. Whenever we opened, it wasn't anything extravagant. But then the next time a person looked, corn was up double digits, beans up double digits, and wheat up double digits, pushing over 20 at times. And, you got to ask, what's going on? So you kind of get on your phone, figure it out. And up the Danube River, we had another port that got bombed. And so obviously some attempts at restricting grain flow out of that part of the world. I've said all along, the grain's going to be there. I think it's going to find a home. I understand some of the angst whenever we see these things happen, but the reality of the situation for the world grain outlook, if you will, is that grain's still there and it will find a home at some point. So the overnight market's not really seeing any follow through. Definitely didn't have a good look for it whenever we got into the day session.
Yeah, and the outside market seemed to really key in on the Fitch downgrade of the U.S. debt.
Yeah, I mean, downgrade the U.S. debt. I think it kind of throws people for a loop for sure. A lot of angst. I think whenever you look at stocks, some people are going to get fairly nervous. Saw fairly large losses on the S&P and the Dow. Whenever you kind of analyze this overall, we all feel like maybe we got past some of these recession fears. But then whenever you start talking things like this, when you start talking about interest rates being at levels that I would say are unhealthy for some folks, considering how debt happy we are here in the U.S., it does cause you some angst for sure.
Weather was also bearish. That was part of the equation. But have we taken out too much weather premium in corn and beans, in your opinion?
That's a good question. I mean, you are in August now. And so with corn, I mean, largely the corn crop, we know what it is, and I'm saying within a range. I mean, obviously, you've seen the USDA change yields from August on farther out by several bushels. But for the most part, most of us out there walking our fields have a really good idea where we're at. Yes, we can still abort more kernels, maybe lose some tips, lose some kernel depth. But for the most part, the ear's been built. We know what we're dealing with. And so, what size of a crop are we looking at? I still think we're probably trading a little under a 175. You see some probably numbers anywhere from 172 to 177, depending on who you talk to. But right now, I'm probably in that 174 range is kind of where I'm thinking. And I think the trade's probably not too far from that.
And Matt, is it just a matter of removing weather premium in the case of corn, or is that market trying to get low enough to figure out where we can stimulate demand?
It's probably more the latter than what it is the former. And so my problem, Michelle, lately, and we farm. I don't want to be bearish. It's not my shtick, if you will. But at the same time, we got to be realistic. And the unfortunate reality is that we could have a pretty low corn yield here in the U.S. here in 23 and still feel fairly comfortable that we're going to see a large increase as far as carryout's concerned. Will it be 2 billion or above? The verdict's out on that, but I've got to think there's a fairly decent possibility that that's going to be the case. I don't necessarily celebrate that. It's just when our export program has been as poor as what it's been. Obviously, ethanol has been pretty good here lately. We had some good ethanol numbers here at midweek, but whenever you look at feed and residual usage, there's definitely some question marks there as to what kind of feed usage we can expect, especially with cattle numbers where they're at. So corn demand has to get better, and we all know usually what it takes to get demand spurred, and typically that means lower prices. So, these really strong prices we enjoyed the last couple of years, I don't think that they're going to be around much here over the next few months.
Now, soybeans, we've been continuing on and off again to see sales and also rumors that China's in buying more. I don't know if that's what kind of popped the market back higher yesterday, but, new crop export sales are actually behind where we were last year at this time, right?
Oh, yeah, for sure. I mean, new crop sales are way behind. And so obviously your biggest purchaser is going to typically be China, and not even by a close margin. And so A lot of folks are asking me, how come China's not in buying soybeans? Well, we've had some weather issues here in the US this year. I think the Chinese have been extremely patient, kind of waiting to see how this plays out. One of the reasons they might be patient, whenever you look at the USDA's forecast for world supplies, you're looking at an increase of pushing 20%, from, I believe, around 102 million metric tons to shade over 120. A lot of that is due to a large crop out of Brazil. And so you have to kind of wonder, what are we going to look at moving forward? What if Argentina would have a decent crop this year at the same time that Brazil would? We know there's going to be a ton of beans planted in the southern hemisphere. I understand that the U.S. acreage is lower, crush margins have been good, and that we're looking at very tight supply here. But as a world originator, you also have to ask yourself, why would I chase $14 beans around whenever world supplies are going to change so much and to a bigger amount? And I do believe that's a big reason why the Chinese have been out of the market. I think they'll buy U.S. beans. I'm just not so sure that they're going to buy them to the tune that we've seen the last couple of years.
Yeah, that certainly may be true. Technicals, let's talk about that, because we barely held $5 on December corn today. Beans under, I think, the 40 and the 200-day moving average. Where do we stop now?
Yeah, we're under the 200 on November beans for sure. I mean, obviously, you can go down and probe for the 100. The thing is on beans, I think we could make a move closer to 1250 than what some people might want to I guess admit that is possible. I certainly could see some sort of a move like that, especially if you stay wet here in August. As far as corn's concerned, you got to think we go back down and visit the lows that we have saw just before the rally. And so you get down into this 480 level fairly handily? I think that it could happen. And so if the month of August is wet, if the month of August is conducive for production, then you've got to ask yourself, what is it that could spur our markets to rally? I don't want to be doom and gloom here. I'm just talking about the reality of the situation. So we certainly have had a lot of opportunities to market here. If you've got crop insurance, obviously in 85% level, you're protected from here on lower at APH yield. So there's a lot of different dynamics at play, but that doesn't mean that we sit here and do nothing. So I do think that there's still some things a producer can do from a risk management standpoint, especially considering some of the downside potential you and I are talking about.
Yeah. So you addressed already why the wheat market, even corn, wasn't able to hold on to the overnight rally from the war news. But do you think this market is going to take a lot more war premium out, or, how low do we have to go here?
Yeah, I mean, as far as the wheat market's concerned, I still think you could take a little bit of wind out of the sails. I think that we've got enough wheat domestically. We've got enough wheat globally. We're not exactly competitive on the world market as far as exports are concerned. And so, you've got to think at some point, maybe you're going to scale back prices just a little bit. I don't know that you're going to fall completely out of bed, but I also felt very uncomfortable that we would rally, from $8 whenever we were looking at and talking about some of those price levels, especially on soft red. But bottom line on wheat is I still think we're probably touch rich for the time being, especially if you see corn and beans move lower due to the weather. Now we know for the most part wheat's not going to really participate in that sort of discussion in the month of August. But for the but you're also looking at wheat probably being more of a follower this time of year anyway.
Yeah. It also felt like the higher dollar may have weighed on the wheat market here today, part of that macroeconomic thing you talked about early on in the program here. And that was really what weighed on the cattle here today, too, wasn't it?
Yeah, I believe so. We had a lot of hopes, I guess, or a lot of folks had hopes that the dollar would continue lower whenever we got on under 100. And then here you look back and all of a sudden we pop right back up. And so pushing some of the higher levels we've seen in the last couple, 3 weeks. And so, at this 102 type level, I mean, how far are you going to take the dollar is the big question. But as far as cattle are concerned, whenever you see the corn market getting beat up again, you got to wonder why cattle didn't take advantage. And I think for one thing, just a little bit tired, if you will, kind of running out of excitement. Whenever you look at cattle on feed numbers, they're not tight by any means, but why would they be? You and I talked about this before. Anybody that's able to turn a heifer into cash, and the kind of cash we're talking now, $1,500, $2,000, pretty hard to turn your nose up at that. And I think a lot of folks are getting right at the same time their pastures are getting right. And whenever you do get a chance to put those heifers back into the herd, I think your cattle on feed numbers are going to be low enough. You'll get another leg higher, and it might be a pretty interesting one.
Yeah, we've still had a little bit of drought liquidation though happening here, and we had sloppy cash last week. Is the thought that we're going to see that again this week, or are we going to be able to see the feedlots hold out?
Yeah, I mean, I think that you'll just it's just kind of be hit and miss. I don't think I feel the push right now that we felt 3 4 weeks ago. I think that you're going to have some decent cash prices here and there, but I don't think that you're going to be setting any records necessarily this week. So I think it's got a little bit of a different feel to it, but still, overall, the trend is still strong. I
Yeah.
think you've got support. Numbers are certainly fundamentally going to be really hard to ignore.
Yeah, this might be a one-off day here today, just after a really good chart day yesterday. All right, thanks for
No.
joining us. Matt Bennett with agmarket.net. That's Markets Now.